here today with me Nigel Gardner, Group Managing Director of Drewry Research. They've just published the Dry Bulk Forecaster. Nigel, you're in a good position today to actually be able to talk about the supply issues, which is very much on everybody's mind.
We start the year with a fleet of 605 million deadweight. In 2012, scheduled deliveries should be 130 million deadweight, but we don't think that level of deliveries will take place.
Is slippage the big issue there?
Slippage is a major factor here. In 2011 and previous years, we've seen slippage rates of about 30%, and we think that it's going to be a similar order in 2012.
What are the main issues with slippage? What's causing it?
Well, finance is one issue, yard performance is another. In some cases, obviously, owners want to delay the delivery of new buildings.
So on the demolition side, you've talked about the slippage. Demolition, is that going to be a factor in 2012 and beyond?
We think that demolition rates in 2012 will be similar to they were in 2011, so about 25 million deadweight being removed.
So overall, your fleet growth going through in 2012, what figures are we looking at?
So we start the year with a fleet of 605. We think that deliveries are going to be about 100 million deadweight. Set against that, we have 25 million of scrapping. So the net increase in the fleet is about 75 million expected for 2012. In round numbers, that's about 12%.
Okay, so when we're looking at that, are there any particular fleet sectors that are going to be receiving a lot of tonnage?
There's two sectors in particular where there's going to be a fairly large increase in supply in 2012, post-Panamax and the very large oil carriers as well.
You've talked about supply. On the demand side of things, what's 2012 got in store? What's Drewry saying about that?
In 2011, the increase in dry bulk trades was about 1.4%. In 2012, based upon the latest economic projections, we think the increase in trade is going to be about 4% in volume terms.
China, very much on everybody's mind in terms of driving the market. Iron ore, obviously, is the commodity that everybody's interested in. Drewry, what are they saying about that in 2012?
Well, obviously iron ore is very important to the dry bulk market as a whole, and clearly China is a major player in that market. It accounts for about 60% of global iron ore imports. So what happens to import levels is very important to ship demand.
There is also talk at the moment that Chinese have a very large stockpiles, and there are talks that they're going to actually be drawing down on those rather than going into the market. Is that something that Drewry's factored in and is looked at?
We've certainly looked at this. The stocks at Chinese ports are about 25 million tonnes over their normal average. So there is clearly a potential to draw down on those stocks if the pricing situation makes that attractive.
So that's going to have a potential impact of the Chinese coming in at various stages through the year as prices are favourable for them?
Quite possibly. And then the other thing that we need to think about is what happens to domestic iron ore production in China as well.
We've talked about iron ore, coal, the other principal bulk commodity. What's Drewry predicting there?
Well, coal is obviously very important to the dry bulk market as a whole. In 2012, we expect coal shipments globally to increase by about 3.5%.
Is that across the board for thermal and coking coal?
No, we see most of the increase taking place in steam coal for power generation.
Having looked at iron ore and coal, when we're looking at the demand sensitivities, what would you say that people need to be looking at with changes in demand?
If you take the pattern of trade in 2011, you look at the relationship of volume movements to ship demand, in effect, for every 10 million tonne increase in the volume of trade, it equates to about a 2 million tonne increase in deadweight demand. It varies a little bit depending upon the commodity in question, but broadly that's a rule of thumb that you can work to.
Also with the changing trade patterns as well, and as you've mentioned earlier, the tonne-mile situation, does that have an implication as well?
Yes, we are seeing changes in the geographical structure of trade which lead to longer haul voyages, and that in turn is obviously having a very positive impact upon vessel demand.
And I presume with that as well, when you have the issues with congestion, port congestion, and bad weather scenarios, that also has an implication as well.
Yeah, I mean, port congestion alone can absorb a lot of the supply in terms of vessels waiting for either loading or discharging. And that certainly has been a feature of the market and it remains a feature of the market today.
So that's something that definitely needs to be something that the market is actually watching. how much tonnage is actually waiting to discharge or load.
Yes, monitoring the number of ships waiting to either discharge or to load is clearly a very important part of looking at the overall supply-demand balance.
In terms of the supply and demand, as you've just said, the supply-demand balance, implications for freight rates and where we are we at the bottom of the market?
If we step back and we look at 2011, we have a situation where the fleet grew in size by about 15%, whereas demand in terms of the volume of trade and ship demand grew by about 1.5%. So it's easy to see why rates were under severe downward pressure for most of the year. For most of 2012, we expect to see a situation where the supply growth is outstripping the growth in demand. But I think it's important to recognise that, in fact, those two key variables are gradually moving towards a more balanced position. And certainly as we get into 2013, supply growth will moderate even more.
So we're looking at a rate recovery towards the end of 2012 and into 2013?
Our expectation is that average freight rates in 2012 for dry bulk carriers will be broadly in line with the average for 2011, maybe a little bit up.
So going forward, we're looking post-2013, things are going to be starting to improve?
Well, obviously subject to what happens into the wider global economy, but overall we feel that in 2012 we're going to see probably the bottom of the latest freight market cycle, and thereafter as we get into 2013 we see freight rates strengthening and obviously increases in values as well.
Thank you, Nigel. We hope you found that piece of interest. Please do, if you have any questions, use the discussion forum below. Post your comment and we'll get back to you. Thank you.